I just found a cheat code. How this person made over $66,000 a month selling options. Now, if you follow my channel for any time at all, you'll know that when I say selling options is dangerous, I am a big believer in how dangerous it is. However, this video claims that you could make over $66,000 a month selling options without any day trading. And by all means, this is way more intelligent than I could have ever come up with. So I'm excited to learn how I did everything wrong and he's doing everything right. Let's watch this together.
To show you how I made $66,700 profit in a month selling options. And I'll also show you the core concepts and some actionable strategies behind it. You can see screenshots from my two trading accounts here. In the first one, I made $40,800 profit. And in the second one, I made $25,800. In my last week's video, I showed you that I was up more than $50,000 this month, but that was the combined total of both these accounts. In this screenshot, I'm showing both of them separately, but you don't have to take my word for it or just believe the screenshots. We will go right into my live account where I will show you everything, all my wins, all my losses, and my year-to-date performance. If you stay till the end, I will teach you a highly profitable strategy, which is also small account friendly.
My results are not typical. I'm not a financial advisor. I do not make any claims or guarantees about what you can do with these strategies. This channel is purely for education purposes, so consult your financial advisor before making any financial decisions.
Now let's dive into my live account and I will show you the real performance. My broker is E-Trade, which is one of the top US-based regulated brokers. It's not a prop funding account. It's not a demo account. It's a real account with real money. So let's
get to the point. Get to the point. Hang on. Lots more screenshots. Get to the point. Still more screenshots. We're 5 minutes deep. 5 minutes deep. Still nothing but screenshots.
Options income, set and forget with a high win rate and comes with rolling and
okay. Skip ahead to the point. 5 minutes and 48 seconds deep before he gets to the point.
Full playbook. I don't really enjoy day trading. I sell options to earn a consistent monthly income.
Okay, first red flag right here. First red flag right here. I was having a conversation with my son last night, and he was like, "Dad, I need to earn $8,000 by January." And I'm like, "Okay, cool. Figure out if you're going to sell a product or service. Figure out who your customers are, and then figure out how you're going to sell it to them." Right? That at the end of the day, that you boil it down: product or service, who your customers are, how you're going to sell it to them. Right? And then he's like, "Well, what if I just trade?" And I'm like, the problem with that, which, certainly I would definitely recommend he do that, is that we can't tell the market when we're going to get paid. Now, that is a huge departure from what a lot of people will tell you online on the internet, because they're not telling the truth. What they're trying to do is sell you on how amazing trading can be, how easy trading can be, how you can make consistent monthly income. So big red flag right off the bat. We can't tell the market when we're going to get paid, because you can literally go months with nothing. You can literally go months with losing trades and then have a 5-day time span like I did in May that grew my account by 30-something% in 5 calendar days. Right? That's equivalent to 3 years of S&P gains that I made in 5 calendar days. It was so much money that I paid off all my wife's student loans and I bought myself a fancy Batman watch. That is how the market operates. You can't tell the market when you will get paid. And if you're trading a strategy to generate monthly income, it is not going to work out. It'll work out for a while, and then it will come back and hit you so hard, so fast, you won't even see it coming. But you know what? What do I know? What do I know? I mean, I'm just a random guy on the internet. Let's let this other random guy on the internet tell us how great it is. Set and forget type strategies. This is going to be really hard not to rage quit this video.
In both my accounts, I traded with approximately $200,000 in total capital. I use set and forget strategies. I teach you a lot of these set and forget strategies on this channel. You can go on my channel and find more videos on different strategies. And I'm going to teach you a couple of more strategies in this video as well.
So I went through all the option strategies. In fact, I wrote a book on all the option strategies. Let me see if I have it handy here. Yeah, I do. I wrote a book on all the option strategies. I even invented 2 of my own. Called the Secret Investing Book. Now, in this book is, I don't know, 200 pages, 180 pages of me talking about different option strategies. That was before I figured out, honestly, the easiest thing to do, the most profitable thing to do for me was as easy as long calls, long puts, deep in the money, long calls, long puts. You don't have to overcomplicate it. Just take a stance, bullish or bearish, and roll with it. By the way, Goody, the skater, I want you to know I really appreciate the super chat, but I never, ever want you guys to send me a super chat, right? I love being able to do this live for you for free. It is my pleasure. It's my passion in life. I love doing this so much. I love this game more than anything. And you don't have to pay me. Honestly, all I'd like you to do is sign up at outlier.com. It's 82 cents a day and change your life in the process. So I appreciate that, Goody. You are a rock star. Thank you so much. He's either going to do put credit spreads or call credit spreads or the wheel strategy, but he's doing out of the money plays. The wheel strategy, and cheers again to you, Goody. I really appreciate you. The wheel strategy sounds so sexy, but it is by far one of the worst things you can do trading, honestly. And man, I saw a comment the other day. I forget what it was. It was like, you don't know what you're talking about. The wheel is such a great strategy. And I'm like, you know what? It is until it's not. And then you get effed over so hard because you thought you were doing the easiest trades possible. I agree. I don't know which random guy on the internet to trust. I don't either. But let's watch this one.
I'm able to manage my trades in 1 to 2 hours a day. At a given time, I have about 5 to 10 active positions, and my duration for these trades is about 2 to 6 weeks. Now, let's first understand the core concepts, and then I will teach you some highly effective and set and forget strategies. In the options market, there are two sides for every trade. There is an option seller, and then there is a buyer. Whenever you want to buy any option, an option seller has to sell an option to you, and you pay them a premium for it. Now, let's say I'm an option seller and you are an option buyer. I own 100 shares of Hood stock, which is currently trading at 104, and you want to buy a 110 strike call from me. To buy this call, you will have to pay me $563 in credit, but I will need 100 shares of Robinhood to be able to underwrite this call. So in case I don't have 100 shares already, I can buy them for $10,400, and then I can sell you a 110 strike call option for it, and I will receive $563 credit for it. Now let's visualize this trade in OptionStrat to understand.
Hang on. Let's try and break this down. So selling an option, I assume what he's saying is that the option or the stock price is $104 at that time. So then the buyer of the option is buying the 110 call for $563. Okay, I'm following. I'm tracking here. Now, if the stock stays the same, by the way, do me a favor in the chat. How many times have you seen a stock stay the same? You know what? Let's pull up a chart. Let's pull up 40 charts. Let's see how many charts we can find when the stock stays the same. That one didn't. 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 That one did not. No, not that one. How about, nope, not that one. Nope. No. No. Nope, not there either. Well, you know what? This was the same after you know, a month and a half. Okay, sure. Nope. Not there either. That's weird. It's almost like stocks don't stay the same. Okay. All right. But it'll be fine. It'll be fine. Let's continue on. By the way, the Goody, the skater, come on, Goody, the skater, cut it out. Don't send any more super chats, please. I love you, my friend, but I love you more than anything. Don't send any more super chats. You're a rock star. I'm signing up for a program by the end of the month. That's great for only 82 cents a day. Don't worry about the money. I'm thankful for your knowledge and your teachings. Well, cheers to you, my friend. Cheers to you. I really appreciate you. Minute by minute. Okay, great point, Pat. Minute by minute. Surely we can find a stock that stays the same minute by minute. So let's go to a 1 minute chart. Got to zoom in. Hang on. Okay, let's see if we can find one that's a 1 minute chart right here that stays the same. No. No. Nope. Nope. SGov stays the same. No. And not again. And no, not there. Well, maybe that one could. I mean, after a little bit of time. Nope. And once again, a nope. So no stocks are staying the same. It's just not going to happen. Maybe that one time at band camp. There you go. There you go. When Beyond was halted for 10 minutes, that was it. That was the time that it wasn't going anywhere. Got it. So when the stock stays the same, which is 0% of the time. Okay. You can sell another covered call next month. Okay, sure. Okay. So he's doing covered calls here. So he bought Hood at $104, and then he's okay, and now I'm getting it. And then the call he sold was the 110 strike, so he got $563. Okay. The share basis was reduced to 98.40. So let's see how we got that. So now this is not a bad idea, right? If you are hell-bent on buying a stock, you can sell calls against it. You don't take on any additional risk. So 104 minus 563 get you to 98.37. And you rounded right here, and that's fine. If you are hell-bent on buying a stock that you're planning to hold forever, you could do a covered call. Now imagine this is your stock price. It's going to go up or down based on what you where you bought it at, right? Now it pushes back by the amount of the call that you sold by $5.63 in this case. So your break even is actually about $5 lower than the current price of the stock. The issue on a covered call comes from the fact that you are capping your gains right here. You're capping your gains. So while it sounds great in theory to reduce your break-even point, reduce the amount that you have on cost basis, because your cost basis in this case is 98.37, the trade-off comes with if Robinhood does amazing and blows through 110, you no longer own the stock. Your stock is gone. It's called away. That's the point of the covered call. All right. Until that stock goes on a run, it looks brilliant. Yeah. So we're trying to find stocks that stay the same in price. Okay. There we go. Finally, we understand the process here. Find a stock that does not go up in value. Okay. But don't find a stock that goes down in value, because you're still going to lose, right? You're still going to lose money here. So the only way that this works is if your stock stays in a very narrow range. Okay, got it. Makes
See $563 credit for it. Now let's visualize this trade in option strat to understand how the game is rigged against option buyers. So if you want to buy this 110 call from me with 1 month.
Dublin Capital has a great point. It's no additional monetary risk, but the assignment risk comes in when you sell that call, losing potential rising above the call price. You're exactly right. You got to thread the needle with this precisely.
Expiry, you will pay me $562 credit, but the game is rigged against you. You have an uphill climb. The stock has to go up 11% just for you to break even, and there is only 28% chance of profit. Even if the
so this okay, let me trying to explain this in the easiest fashion possible. This is Options Deep Dive Wednesday, though, so we're gonna get deep. This is the insidious nature of selling options, right? You, the buyer, are so stupid. You only have a 28% of being only have a 28% chance of being profitable. Me as the option seller, I'm such a genius. Are you kidding me? This has a 72% chance of profiting. But, and this is what caught Chris, it felt like every time. I had an 84% win rate and still lost $200,000. How is that even possible? It's because when you do lose, and you will lose so much more than you can win. Last week, I would definitely recommend going to our Options Deep Dive playlist. We got all the videos where I've just like gone on huge tangents about how brutal selling options can be. But it's great to learn because it's so it sounds so sexy, right? Listen, if I could get into a trade where it goes up, it goes down, or it goes nowhere, and I can still profit, that is such a brilliant move, right? Right. But when you lose and it's 6, 8, 10, 12x as much as you could possibly win, which means you need 6, 8, 10, 12 trades in a row to get back to break even, it becomes a very fast losing proposition.
Stock moves up by 15%, in that case, you can make 80% profit, but there is a very slim chance that's going to happen. The stock needs to move 15% in just 1 month, which
So what he's saying here is that there's a very slim chance that he's going to lose. Now, I'm not saying that he did lose, right? This was made 2 months ago. I don't know what the stock did. I'm not even going to look at, or should we? Or should we look at what the stock did during that time? Maybe this would be a great exercise. All right, so I don't know the date it was recorded, right? It was published on August 31st. What did Robinhood do? What did Robinhood do? I don't have it saved. August 31st, daily chart. August 31st. Okay. August 31st was a weekend. Oh, snap. Oh, snap. Oh, this is the best example ever of all time. Yes! We just found the best example of all time. In the chat, type the word best right now because we're about to blow this theory out of the water so hard. Type the word chat type the word best in the chat right now. Okay. This is wonderful. This makes me so happy. So, this genius strategy, this amazingly so smart genius strategy, this incredibly intelligent, unbelievably high probability, high profitability strategy was so smart that when he had 100 shares, according to him, he had 100 shares of Robinhood at $104. Okay, so I'm gonna need a spreadsheet for this. He had 100 shares of Robinhood at $104. Oh man, I'm so stoked that this is what we found today. So he bought 100 shares at 104. Okay, so his total capital outlay is this times this. All right, $10,400. Cool. Then he sold one call for 563, wasn't it? 536, 563, something like that. 563. Yeah. Look at that short-term memory working hard up to date. Working hard to date. This times 100 get you $563, which means his total capital outlay here was $9,837. And then you divide that by 100. Divided by 100 gets to his cost basis of $98.37. Okay, everybody tracking? If you understand where we're at right now, how his cost basis is $98.37, type 90. No, I was gonna say type 67. No. Type 98 in the chat. Like, you get it? You see where he's got $98, okay? You see where he's got $98. Now, he sold the 110 call, which means the absolute maximum that he can make in this trade is the difference in 110 minus 104, $6 plus this, which means the most he could possibly make is $11.63. That is the absolute max he can make in this trade. He cannot make any more than this. Not a possibility. Okay. And let's do this times 100, which gives him $1,163. Okay. Not a bad return, right? $1,163 on 10,400. Because at the end of the day, that was his actual capital outlay. 11.18%, 11.2%. That's not bad at all. Not bad at all. But we got a real big problem here. And this is why, even when you think that selling covered calls is genius, the problem is when this exact situation happens. And so I'm only taking this from August 29th. That was the closest to the date of the publishing there. Was around $104. So let's put this right here. Let's put opening. Oh my gosh, this is going to be brilliant. I love this. I'm so excited about this. We'll put exactly $104. Okay. So in theory, this is where he bought it. First, I wouldn't have bought it here. Your 10's under the 20. It's above the 50 right here. So it's in a sideways trend right now. But let's also mark on here the, let's mark in here the 110. He gave the stock this much room to run. He gave the stock this much room to run. That's it. He gave the stock this much room to run. So I don't know when he posted this, and this is what I'm saying. I don't know. I'm not claiming to know. But what I am saying is that the published date is August 31st. When I look at the chart right here, it actually was at $104 on this date. So we're going to roll with that. And then the stock goes up. How much? Let's go to the peak up here just to make the point even more exaggerated. It went up $48. It went up 46%. 46%. So the stock ended up going to, now I know he couldn't have sold at the top. Nobody's saying that he could. But imagine, just imagine that he decided to get out at 152.76. Okay? 152.76. He gave up the gains of this to here, $42.76, meaning he gave up a gain that would have got him up to 104 equals this. No, equals this minus this. Okay. So he gave up a $48 gain, which would have been this divided by his entry price, a 46% gain, a 47% gain. And how much is that in dollars? Okay. Equals this times 100. He gave up a $4,000, let's round it up to a $5,000 gain for $1,163 gain, which was approximately how much? This divided by this. He gave up 400% more gains. Now, this will tell you never to sell covered calls. I don't know what will. He gave up 400% more gains as the stock exploded higher because he wanted to take the little tiny itty bitty baby bit of premium by selling the covered call. So he gave up all of this move. Everything between this red line and this blue line, he didn't get to participate in. Like, it just did not happen. It did not materialize. His option, no matter what the expiration was between that date and today, would have been called away. Was it really worth selling the option, capping your gains right here? I would say no. You tell me in the chat. Was it worth selling the covered call in this example? Yes or no? So this is different, right? Buying the call is totally different. Buying the call and rolling it, totally different. Like Tyson made bank on that. Tyson made so much money. He could not have rolled up in this case. Well, maybe he could have. But we're trying to keep the example here of the point of the cover call, right? We're not buying calls in this case. We're selling calls against it. I don't think it was worth it at all. I don't think any of y'all think so either. But how else would you get the YouTube clicks? I don't know. But okay. So for example, he didn't lose on the trade. Let's get that perfectly clear. He didn't lose on the trade. He still made 11% on the trade, but he could have made 46%. He could have made 400% more on the trade. But please continue telling me how you made $66,000 a month selling options without day trading.
Which is kind of rare. And now this is how it looks from the option seller side of things. An option seller is going to receive $562 credit and he has 62% chance of making profit. Now there are going to be three scenarios. If the stock goes up, I will make 12% profit. Even if the stock goes up by 5%.
So that's what he's talking about, right? That 11-12% is exactly what we calculated.
And I will make 12% profit if the stock goes up.
Yeah, if the stock goes gangbusters higher, you're capped. You're capped. Period. Full stop. No, you know what? I think we were right on the date of expiration because this is showing September. This is showing October. This was August 31st. We are right. We are right on when he bought it. There you go.
By 12%, I will still make 12% profit. But the downside is if the stock goes parabolic, goes up 20%.
Now, Scott has a great point here. Scott has a great point here. How much better would the person who bought the call be doing versus him who sold the call? Well, let's just take a look at it, right? If the person bought the 110 call and it got up to 152, it was $42 of profit between those 2 points there. And the person paid $5.63. So you take 42 and you divide it by 563, it gives you a 760% gain. So the person who bought the call is up 760%. Thank you, Scott. What a wonderful point. What a wonderful point. I really appreciate you pointing that out. The person who bought the call, which he said, such a stupid idea. The person who bought the call only has a 28% probability of profit. What an ignoramus. What a dummy. What a stupid boy. Only has a 28% chance of profitability. This is what I'm telling you, people. When you're wrong selling options, you're wrong bigly. When you're wrong selling options, it's not a little thing. It is a bologna sandwich, big difference. Mr. Ross Smith family. This dude made 11% by selling his option to the guy who just made 760% to the person who bought it. What's up, Trav? You fixed your username. Excellent. How cool is that? How cool is that? That wasn't even out of the money call. That wasn't even an in the money call, which is where I live. A 760% gain on the same trade where he made 11%. Goodness gravy. It's not even, it's, and he won on the trade. He won on the trade. He didn't lose because he had the covered call. Had he sold the call outright without the shares with it, he would be down the 700%. Let that sink in. If he didn't have the shares to go along with it to offset the losses from the call he sold, he would be down the 700%. That is exactly what I mean. Why it takes you 6, 8, 10, 12x that many times to get back one bad trade. If he didn't have the shares to go with it, it would have been a 7x trade that he'd have to get back. What a stupid boy. A professional trader or comedian, or the pain of professional trading made him a comedian. I am no comedian. Just ask my wife. I am the most not funny person ever.
30%. My maximum upside is 12%, but I have a very high probability of making that profit. If the stock stays the same, I will still make profit.
If the stock stays the same, I wonder how often that happens.
In that case, I will make 6.7% profit. And if the stock goes down, I can still break even. If the stock goes down a lot, let's say it goes down 11%. In that case, my loss is only going to be 5.5%. So this is also providing me a downside protection. Now,
I don't want to continue on with this video, and I still want to give you some good value here today. He won the trade, but I guarantee you, it sure felt like a loser. It sure felt like a loser when, you know, the person who bought the call is up 760% and you're up 11, and now you no longer own the shares. Right? That definitely still feels like a loser. But I don't want the Pink Dolphin to feel like a loser. Pink Dolphin had a great question before we started here. Any chance for some free trial? Your app sounds tempting, but it's just there's so many crooks out there. I would prefer to just see if it works and if I can use it. So don't listen to me. In the chat, do me a favor. I'd love to highlight some comments from you guys. I'll even make the font bigger and wider. Tell me your experiences with Outlier. Tell the Pink Dolphin your experiences with Outlier, right? That's what I'd like to hear. That's what I'd like to hear. At Outlier is great because we give you access to the platform. The annual pass is just 82 cents a day. We do have a 2-week free trial. And then when you get access to the software, it has all the buy and sell signals, all the market data that you're going to need, all the information that you're going to need to manage your account like a fund manager. And then you'll be able to see all my trades as well as I go and I lead the charge with a group of outliers who are going to win the US Investing Championship. I had said that I'm going to win, and honestly, I don't want to win. When I can have other outliers doing it with me, when I can have a whole team of people doing it with me, I'm looking at it like we're all going to win. So when we all win the US Investing Championship together, that's what I'm excited about. Let's see. Eric says it works. Tyson says big money. Brandon says love Outlier. Skinny Buff Guy says, yeah, there's a free trial. Anthony says he's making money. Pink Dolphin, excellent. Gets stuck in. Steve says Outlier is all you need. Outlier is a game changer. It's an amazing place to be. Listen, this is why I want to hear from you, right? It's one thing for me as a partner at Outlier, the chief marketing officer, to tell you how great Outlier is. It's another thing to hear from other people who are using it and being successful as well, right? Trav says the first time he used Outlier, he paid for 10 years of membership. Best educational professional YouTuber. Thank you. I appreciate that, Gene. I try really hard. Phil says it's hard to pay for itself. 10x with 4 trades. Yeah. Richard says I subscribe to 3 other products, and today all I use is Outlier. It works. Chris is right. Isn't it cool? Right. Now, part of Outlier is that we want you to be successful. That's why I make these videos twice a day, every day. Is not just because I love to lose more hair as I listen to option sellers talk about how great options are, which they are. Deep in the money, long options are amazing. You can get incredible leveraged returns. Selling options is a loser's game. Rex says this is the real deal, right? Jay says that I'm the best teacher. I certainly am not. I appreciate that, but certainly I'm not. But what we are going to do is starting next Tuesday, every Tuesday and Thursday, we are restarting Outlier University. In Outlier University, it is 100% free. Listen to my words, 100% free. The goal with Outlier University is to help you to be as successful as possible, right? Other YouTubers, other finance people want to charge you tens of thousands of dollars for what we are going to teach for free. Now, we've already done this once with the Alpha class. Now we're on the Bravo class, right? We change lives at Outlier. We give you everything you need to be successful at Outlier. And the annual pass is 82 cents a day with everything included. There are no upsells. There is no low different tiers. Everything is one price, 82 cents a day. And there is no BS. There is no BS. One strategy I learned paid for more than a year of subscriptions. Absolutely. Plumber Fred says free is my favorite price, but actually I misspoke. There is a cost of admission this year. I totally forgot. The Bravo class does have cost of admission. And that cost of admission is sharing the free video to 5 people. Okay. Each time we go live, Tuesday and Thursday in the afternoons, my ask of you is that you share it with 5 people, because there are tons of people who want to be successful in the market and don't know where to start, and they don't have the money to spend tens of thousands of dollars to learn, right? I've been trading for 16 years. I have made so much money in the market, and I want you to be successful and follow in my footsteps. And I'm going to teach you every single thing that I know as part of Outlier University. Arturo says, Chris has changed my outlook on stocks entirely. I've learned more this past year than I have in my last 7 years combined. Great point. And we have a super active Discord, right? The Discord is amazing. The Discord is fantastic. Launchpad says it's a community of outliers that teaches. It's a community of outliers with the bestest teacher, and Batman shows up every once in a while. Batman does show up every once in a while. It's an investing cheat code. All right. Plumber Fred said he shared it with his doctor yesterday. Very, very cool. So listen, I want you to be successful. The best, easiest way to be successful is to head over to outlier.com, grab the annual pass for 82 cents a day. Start watching all the videos. I've made over 2,000 videos on YouTube, right? We've got them categorized into all kinds of different playlists. I want you to be successful. You don't have to pay us at Outlier anything to be successful, because I'm going to teach you everything you need. But to get the buy and sell signals, to get the market data, you are going to need Outlier. And of course, it is priced unbelievably inexpensive. It costs more to enter the US Investing Championship as the entrance fee than it does to have a full year of Outlier. Did you know that? It's $425 to enter the US Investing Championship, which we will dominate in 2026, than it does for a year of Outlier at 82 cents a day. Give me a break. Give me a break. Mr. B said he's made 12% in 7 days on Plan ETF, and it paid for 12 years of Outlier. They like that. They like that. So anyway, don't listen to me. Listen to all these incredible outliers that are coming through in the chat right now. And if you're ready to save time, make money, and start winning with less risk, click one of these 2 videos. We'll talk soon.